Picture this. We're halfway through 2025. Mortgage rates are stuck near 7%, and the Fed keeps debating cutting rates, but nothing's changing. You might be asking, what if it never happens? What does that mean for me as a buyer, seller, or homeowner in Phoenix? Let's start with the big picture. Home sales across the US are sluggish. In May 2025, existing home sales barely ticked up by 0.8%, but that's still the slowest showing for that month since 2009. In prices, a record 422,000 was the national median per May per the National Association of Realtors. Here in Phoenix, it's no different. Listings are staying on the market longer, buyers are waiting, sellers are resisting. We're in a classic standoff. And according to azfamily.com, 28% of Phoenix listings dropped their asking price in April, compared to 18% nationally. And that gap isn't just data, it's real life opportunity. And it's also a warning. If rates don't drop, the market doesn't pause, it shifts. Overpriced homes stall, buyers stall, and if you're not ready with the strategy, you risk getting left behind. Okay, so why aren't rates dropping? First, there's inflation. After peaking at 2.8% in February, the annual CPI cooled slightly to 2.4% in March, but that's still well above the Fed's 2% target. New tariffs and geopolitical risks, including recent oil price surges tied to Middle East tension, are creating additional inflation pressure. This has made the Federal Reserve cautious. Even though Fed Vice Chair Michelle Bowman signaled support for a rate cut as soon as July, Fed Chair Powell and others have emphasized that they need to see sustained inflation declines before pulling the trigger. Their projections still include two rate cuts in 2025, but driven by data, not politics. And mortgage rates, they're influenced not just by Fed policy, but by long-term bond markets. Investors haven't fully priced in those cuts yet. That means rates likely stay in the high sixes, not dropping to 5% throughout 2025. JP Morgan and Forbes both forecast rates staying above 6.5% this year. So here's the reality. Waiting for low rates may not pay off, and it could cost you. Let's break down what that means for you, starting with buyers. Let's talk about all the buyers over the past year or two who bought homes under the assumption that rates would come down quickly. Many of them use tools like 2-1 or 3-2-1 rate buydowns, temporary seller paid incentives that artificially lower the interest rate for the first couple of years of the loan. On a 3-2-1 buydown, for example, you might start at 4%, jump to 5%, then finally land at 6% by year three. These were great short-term solutions if rates dropped and the buyer could refinance before the final bump hit. But we're now heading into 2025's second half, and rates are still hovering around 6.75%, according to Freddie Mac, which means a lot of these buyers are nearing the end of their buy-down runway, and they're staring down higher monthly payments than they expected. According to Redfin, nearly 20% of 2022 and 2023 buyers plan to refinance within 18 to 24 months, but now they can't, not without jumping into a higher rate than they already have. So that monthly payment shock is real. Some may list their homes, others may hold, but stop spending elsewhere, which has its own economic ripple. And that brings us to pricing. If rates stay high and these homeowners can't refi, more of them may choose to sell, especially if they bought with tight margins or minimal equity. But they're also entering a market that's already seeing discounts. As I mentioned earlier, 28% of Phoenix area listings dropped their price in April, a full 10% points higher than the national average. And that kind of shift in seller mindset, it's a signal. It tells us sellers are adjusting expectations. They're getting more realistic and in many cases motivated. So if you're a buyer watching this, know this. The deal isn't always in the price tag. It's in what happens after the offer. We're getting clients closing cost credits, permanent buy downs, and inspection leverage, even when homes look full priced on paper. And if you're a seller, you can't just list and hope. The buyers are savvier than ever, and they've been burned by rate promises that didn't come true. That means your pricing, presentation, and strategy need to be airtight. Now, for sellers, this high rate environment is tricky, but it's not hopeless. You just can't wing it. The old list high and see what happens approach, that doesn't work when buyers are walking in with 7% rates and sticker shock from their lender. Buyers today are cautious, calculated, and way more informed than they were 3 years ago. Zillow alerts, Redfin price history, even Reddit forums, they're studying this stuff, and that means if your home isn't priced strategically or if it lingers too long, it raises red flags. But here's where it gets interesting. In a high rate market, not every buyer is looking for a discount. Some are looking for relief, financial relief. That's where a smart seller can actually use creative financing tools to sweeten the deal without just slashing the list price. Let's say a seller offers a $10,000 concession. Instead of knocking 10 grand off the asking price, what if a buyer used it for a permanent rate buy down? That could reduce their monthly payments far more than a straight price cut. In many cases, especially in Phoenix and surrounding markets like Goodyear and Surprise, this is exactly the strategy we're using to close deals that would otherwise stall out. And buyers love it because even though rates haven't dropped, they can still get a payment they're comfortable with. And when rates eventually do come down, if they do, they can always refinance. So what we're seeing now is this. Buyers still in the market aren't just buying homes, they're buying flexibility. They want options, they want negotiation room, and if you're a seller who understands that, or working with an agent who does, you're at a massive advantage. It's not just about who has the prettiest kitchen anymore, it's about who has the smartest deal structure. So what happens if interest rates don't drop anytime soon? The answer is the market adapts. The people who succeed aren't the ones who wait for the perfect conditions. It's the ones who adjust their strategy, understand their leverage, and make informed decisions with what the market's giving them right now. If you're a buyer, especially in the greater Phoenix area, whether it's Buckeye, Fountain Hills, Glendale, or Goodyear, this isn't the time to be passive. You have options that most buyers don't even realize exist, from permanent rate buydowns to seller paid closing costs and even custom financing structures for new builds. This is where the right negotiation strategy can make tens of thousands of dollars of difference, and I'm not exaggerating. I've helped buyers walk into homes with below market payments, cash in hand after closing, or inspection credits that made the final numbers actually work. The key is knowing what to ask for, what to push on, and when to walk away. And if you're a seller, this is your moment to stand out. Inventory is still somewhat limited, but buyer expectations are rising. They want more than just a clean kitchen and a pretty yard. They want a deal that makes sense at 6.75% interest rates. And that doesn't mean you need to give your house away. It means you need a pricing strategy, marketing that speaks to your ideal buyer, and a game plan built around your specific timeline and motivation. That's where I come in. Every seller I work with gets a fully customized roadmap based on the type of buyer we're targeting, your goals, and the current data in your micro market. Whether you're trying to upgrade, relocate, or just see what your options are, this isn't guesswork, it's strategy. So whether you're buying, selling, or just trying to wrap your head around this wild 2025 housing market, don't do it alone. Reach out and let's figure out what makes sense for your situation. Go ahead and like this video if you got value from it. Subscribe if you want more data-driven, no-fluff real estate insights, especially here in Arizona's market. And drop a comment if you've got questions or even just thoughts on the market. I'd love to hear from you. Thanks for watching, and I'll catch you in the next one.